The question now is, who gets credit for this 10-year bull run? President Trump or former President Obama? Well, let's ask our market pros. Gary Kaltbaum's with us, Rebecca Walser, and Scott Martin. So, Gary, who gets the credit?
Well, under Obama, I give it to Obama and the central banks. Under Trump, I give Trump and the tax cuts and the regulatory cuts. But I think the last 2 months, central banks are back in force, not only here and around the globe, but overall, I give the hard work and the ingenuity and the sweat and toil of the great American people and the great American companies that keep coming up with new inventions, new technologies, new medical breakthroughs. And I think the best is yet to come in the next 10 years.
You know, Rebecca, when the market gets hammered the way it did right before President Obama came in, you do anticipate that it will rebound. And we were down 50%. It was ridiculously sold off. But to the extent that it's rallied now, many people are really shocked that 10 years later, we'd still be going like this.
Yeah, absolutely, Charles. But the thing is, I mean, let's just be honest. Over Obama's a full 8-year period, he had GDP of 1.5%. His last year in office, it was 1.6, and then Trump came in 2017 and took it to 2.3, and that's what his economists had projected. So I give all the credit to President Trump, deregulatory policy, tax policy, and unfortunately, I think Obama had higher wealth inequality and not real good job growth. So GDP numbers were awful. So no, it is unusual to have 10 years. This is the longest ever. And I do think the global slowdown is making investors nervous, and it's interesting. We're at a really interesting point.
Well, you know, Scott, today we did learn also that's interesting is that accompanying this rebound in the stock market is an economic recovery that's finally getting to the masses. Wages are up now big time, 4 months in a row over 3%. If you're a blue-collar worker, up 7 months in a row over 3%. We didn't think that could ever happen anymore. So, you know, that goes part and parcel, of course, with this market, no?
Yeah, in a couple more job months or job growth months, we're going to see, Charles, I think what we're going to see in the next couple months, we're going to see wages go towards 4%. And you're seeing companies, too. You know, you guys talked about in kind of the previous comments about a little bit of a different feel to the economy now, isn't it? It feels a little bit more self-sustaining. It feels a little more energetic versus, say, what it was in the previous administration. So you're seeing companies raise wages, minimum wage, and things like that because of the fact that they're confident about the regulatory environment going forward. They're confident about what's happening in D.C. now going forward. So that's another reason that companies, which is a good thing, are going to make their own decisions. They're going to breathe and live on their own and create job growth, create economic growth, and that's who is going to keep this economy going in the coming years.
Now, I want to go back to the New York Stock Exchange, bring Susan Lee back into this. And what's interesting, Susan, is overnight, China's stock market, their main market, the Shanghai, down more than 4%. It's been absolutely decimated over the last year compared to our market, which is up significantly over the same time since President Trump has been in office. As we head into the final phase of the China-U.S. trade talks, what kind of an impact does that give us? What kind of leverage does that give President Trump?
Well, over the last 10 years, Charles, my favorite term has been the cleanest dirty shirt, and that's what the U.S. market and the U.S. economy has been. And I would say, actually, especially true in the current environment in 2019. We do have a slowing economy taking place in China. They were down some 30% last year. Up, though, I would say probably the best performing stock market so far in 2019. But that all hinges on getting a U.S.-China trade deal. Last night, we saw exports really falling off a cliff, down some 20% in a month. And don't forget, that is the bread and butter of the Chinese economy. That's what oils it. And if that's going down at this point, you can imagine that they are looking at a very sharp downturn, and they want to sign a deal as soon as possible. So maybe the U.S. and the Trump administration has the upper hand when it comes to signing possibly a trade truce.
Gary, you know, you brought up the Federal Reserve. Again, you know, Powell, let's give him credit for sinking the market in the fourth quarter of last year. Let's give him credit for maybe coming to a senses. But now there's some concerns that the Fed is going to become even ultra dovish and even try to push this economy even further. And some people are concerned about that. So where do you see interest rates?
Well, I was the first to say that they were going to stop dead in their tracks on raising rates, and I'll be the first to say that the next move is going to be lowering of rates. You know, look, we continue to be the very strong developing countries. I think China may be even in a recession, but we're not immune. I think we'll slow down also, and I think Powell has already telegraphed it, and I suspect we're going to see him lower rates during 2019. Probably helps more markets and keep fingers crossed, keeps our economy in good stead. And again, let me repeat something. I give all the credit to Trump on not only lowering the taxes, but lowering the regulatory front. That was huge. Obama for 8 years was the king of regulations, and that needed to be undone. So good on this president.
There's no doubt that the business tone has taken a different tenor in the last 2 years, Scott, and you have to wonder what that means for this market. We know there's an old saying on Wall Street that bull markets don't die of old age, but there's so many folks out there reluctant to get in this market, even though they see their own personal fortunes improving.
Yeah, and Charles, I mean, it goes across the board. It's from large multinational industrials to a small business owner like myself that, to Gary's point, sees that better regulatory environment, the better tax environment that we've seen, and that can help kind of unleash that next level of growth that I think everybody's kind of waiting for here, even trade deal or not. So I think that's really good. And I like Susan's point, too, about kind of the cleanest dirty shirt in the basket here, and I'll throw another one to her. You know, the U.S. is still kind of like the strongest guy or girl at the beach. And so that's another reason why, if you're an investor here and you see pullbacks like we've seen in the S&P 500 this week alone on, say, controversial or maybe good or bad economic data, that's why I would take that as an opportunity to get in and put some money to work.
Rebecca, 20,000 jobs reported for last month. Perhaps that gets revised higher. By the same token, though, the wage number was absolutely phenomenal. And what I think people aren't talking about, the Federal Reserve is not going to get in the way. They're going to let Americans get a raise. What does that mean for the economy and the stock market?
Yeah, I mean, Charles, like you said, we had wage growth and we had the unemployment actually drop. So you actually even had January revised upwards to 311,000. So if we look at the trends, 6 months looks good, 3 months looks good. The fundamentals are still there. I don't think that the market needs to overreact. It overreacted a little bit this morning. Now you see it's pulled back and kind of normalized. So we expect that the underlying fundamentals are the best in the world. Are we going to have the fact that we've had an age bull market here having some impact and some, economic creep in from China and the EU? I mean, obviously it affects us, but we still are, as you said, Scott, the best in the world.
All right. Double-edged sword that there's not a lot of enthusiasm about the market. Most experts say that's one of the reasons it's going to keep going higher. But we've got I want to thank our experts on this panel. Thank you all very much. Appreciate it.